Hi all, this is Dr. J, streaming live from Long Island, New York, where it's been raining all day. Fog, rain, mist, yuck, ick, and yet in the borough of Manhattan, I'm told it was not raining at all today. And we're not really that far away that we should have that much of a difference in weather. In any event, salubrious weather of Long Island, so be it for the salubrious weather of Long Island. In tonight's action, Dr. J wants to reaffirm his pick of the Nationals to win the World Series. The underdog shall prevail with Max Scherzer on the mound against Zach Greinke. That alone is advantage Nationals. So we'll see what happens. I mean, it would be extremely unusual. I don't know if it's ever happened for a series to go 7 games and the team on the road to win 4 of them. So that might be a new first. Okay, so in fact, I'm almost sure that it would be a new first. Also, Scherzer is going for his 4th postseason win in a row. I don't have money on this, and I know Dustin has Houston, so I hope for Dustin's sake, Houston prevails. But I think Washington will. Clarence, how are you? Good to see you, Clarence. What's doing? We're raining by you where you are? Or are you clear skies today? Before we get to the video charts, I just want to say that in case you are unaware of it, the Fed did lower by the expected 0.25%, the third lowering in a row, down to $1.5%. So that's impetus for the market to move up on. It did turn the Dow around from flat to up over 100 points. So we'll look at the chart of the Dow, the S&P. We're going to look at BIOC, a cancer, let's call it a liquid biopsy cancer company, liquid biopsy cancer company. There's a lot of them. This is just another one of them. Somebody asked for my opinion on it. My opinion you will get. And athx, we're going to look at that. It's been in a very long consolidation pattern, according to Dr. J's thinking, and could stay in it a little while longer. We'll take a look at that chart. CVM, of course, we'll look at that. That's a favorite. We will look at, I'd like to look at Amazon, Netflix, maybe 1 or 2 others. And of course, I will try to take any requests, any and all requests, well, not all, but some requests from the Peanut Gallery as the Peanut Gallery grows. So let's get to it. I'm going to share screen because I don't want to go more than another 20, 25 minutes. I want to limit it to 30 minutes total. So let's do the share screen. As always, for your own due diligence, my opinions are strictly my own, do not constitute investment advice. Neither does Clarence's opinions or any other opinions that you may see on this show. And consult with an investment advisor if you want to act on any of our ideas. Okay, share screen. Please subscribe as well. Give me a thumbs up. And let's get to it. All right, share. I think we're sharing. We'll do the Dow first. Now that can't be right. The Dow is up on the day, not down on the day. So let's refresh that. I don't know why it does this, Yahoo. Yahoo don't like me. All right. That was from October 18th. My goodness. That was a really stale page. Up 115.43%. And approaching all-time highs at 27,380. So it needs just another 200 points. But as you'll see, it's going to be a tough battle to get there. We have to overcome a series of highs to get there. And I drew in these straight lines to indicate the various highs that we have to overcome. I think there's about 5. So there's a wall of highs between the Dow going in sideways pattern and crossing to new highs. So how long it takes, I think it'll knock on the door a while. Eventually it'll get there. Hopefully sooner as opposed to later. Certainly, I think by the end of November we'll be in new high territory. I think December and January and February will be very strong months, into March probably. And after that, well, we'll see. I'm not going to project any further than that. So notice it's out of its Zoom channel that we talked about, but we have a good little retreat back to the gap from Tuesday. So we had a gap opening on Wednesday. We closed that gap today and finished nicely with a very nice green candle with a long bottom wick and almost no upper wick, kind of candle Dr. J salivates at. Of course, the opposite of the day before. So it turned it around today. Very strong, very bullish. I do like the Dow, I do like the markets, I do like all the indices, but it may take a little doing to get through this wall of highs. That's all I'm saying. So if it backs down a little bit, I think this would be a good area to get in if you want to get in on the diamonds. I would think midpoint of this big green candle. I like big green candles. We have one from Tuesday, and the midpoint of that, let me just draw that in, if I may, just to get an idea of where support might be. Should we slide down or give back a little bit? So I think should we give back a little bit, we probably get support about 26,850. And that's not that far. So according to my way of thinking, we're going to be in a fairly narrow 600-point trading range until we make new highs. That's not so bad, right? All right, so let's take a look at the SPX, which is making new highs, unlike the Dow. So SPX. What is this? The chart is not available. I don't know why Yahoo is giving me a tough time. It's mad at me. Yahoo is mad at me. Try again. One more time. Let me see if anybody else has joined Clarence. Come on, give me the chart. I will come back to that. I don't want to belabor the point. So we'll go to BIOC, which was a request on StockTwits. I don't remember who. I'm sorry, but I promise it was a request. So we'll take a look at that. Boeing CEO got hammered today. So what else is new, Clarence? All right, full screen on this. I did indicate in my opening remarks that I'm not in love with these cancer detection companies because most of them just don't seem to make it. There's another one, PPRO, that I've talked about, which also was going to have the blood test to detect cancer. And there's been so many that have been trying for colorectal cancer and really without definitive results. Okay, so we have the 50 crossing the 100 and the 200 above all of them. So everything is exactly the opposite of what it should be in a bull market. And we have the stock trading below the 50, everything indicating a bear market. Plus we have a very strong trend line down. So it doesn't look that interesting unless I had some real strong fundamental reason to buy this thing. So I would probably pass, not loving what the company does, not loving the chart. So I would be probably not interested in buying this at this time, although I will put this on my watch list. athx. One that I maybe if I didn't own would be waiting on to buy, or maybe not. Maybe I just buy it now because it looks like it's been in a long consolidation pattern and is very near the lows. Has been bouncing off the lows. So maybe this is a good one to put a little money into if you have patience. And also, if you can withstand a possible short attack, because the shorts have time to play. Nothing really is expected, I don't think. Maybe some secondary results on acute respiratory distress syndrome. Odds, I'm not sure what phase we're in even in that, but the one that interests me the most is ischemic stroke. And that was still a ways off. It's kind of like the cold fusion. It's always 5 years away. Well, this is always a year away from results of its phase 3 trial in Japan. So athx doesn't seem to do anything in a timely fashion. So the shorts can play. We're in a obvious downward trend line from $2 a share all the way down here. And we have support right here in the 127 area to 125 on 827. So 125, 127 looks like support. If you look at this triangle that's forming, it's got a ways to go all the way to the end of November before we must break out of it. So we could easily trade in this range for a long time. Not that long a time, a couple of weeks, 3 weeks maybe. And when we break out, in my opinion, it's more likely than not that we're going to break to the upside. The bulls will finally prevail. I don't think you can pry away shares from these long-time bulls like me and many others I know. So the larger positions, I think, are very, very firm here. So it's going to be difficult for the shorts to manipulate or to use scare tactics, FUD, whatever you want to call it, to drive the price much lower, I think. Of course, there's always threats of dilution. I don't care whether or not the company uses their ATM or doesn't use their ATM. There's that threat that they can. They have, I don't remember how much that they could take at the market. They could sell at the market. That could have a dampening effect on any rally. I don't know that they're using it. I don't know that they will have to use it, but it's there, and it's an overhang that it works against the bulls, at least for the short term. Okay, that's my opinion on athx. If it hits, will I be buying more? Maybe, because I have a bad habit of buying more. If I didn't own it, would I buy it? Maybe. It's hard for me to be objective on this one. But this is an interesting one. I own tons of it. And I'm waiting for the results of that phase 3 trial come hell or high water. Okay, let's take a look at another one. How about CVM, an old favorite of ours? CVM. I don't know what happened to the SPX. That's interesting. It just seems to have vanished. I'm going to X out this version of the SPX. And I do want to take a look at that also besides CVM. Maybe we'll take a quick look at SPX. See if we can't get that up this time. It was up 1/3 today. Considering how much it's been up, we'll take it. So I've been on a nice run to new all-time highs. And the chart should reflect that. So let's take a look at the chart. Higher highs, very nice. 3, 4, 5 days in a row, we've made higher highs. I like that. So we are on a definite tear from Monday, this is last Friday. Monday was a higher high. Tuesday was a higher high. Wednesday was a higher high. Thursday was a higher high. And I believe today was 30.47.87. Let's see what this high was. 30.50. So we have yet another high today, reversing the somewhat questionable candle of the day before, just like in the Dow. So this is a very strong candle. When the news came of the Fed hike, we bounced off the lows of the day. So it had been negative, and we closed up 1/3%. Very nice. And we have a nice upward trend line. So there's no reason to expect we shouldn't make higher highs. Of course, we could come down a little breather to this level of right in here at this high. Would probably, I'd hate to say be healthy, but that's the terminology that you hear all the time. A small drawback is healthy. Small pullbacks are healthy. I don't know who they're healthy for, but that's the story, they're healthy. So I'll draw a healthy pullback. There you go, to this level right about here, 3,011. It doesn't have to pull back. I could continue to make new highs and just keep going up. But if it does pull back, I think we have support above 3,000, which is a nice place to have support. You don't want it to go below that psychological 3,000 level. Okay, let's get to some more interesting stocks like CVM. That one is one of the most interesting biotech plays on the NASDAQ, in my opinion. because data is not, if not imminent, within half a year, I think is a fairly safe bet that we will get a data readout of a long road phase 3 trial that took about 8-9 years to come to a conclusion. And I hope that I'm confident. No, I'm not that confident. Let's say I believe that CVM will not disappoint its longs. May disappoint some longs who are looking for very unrealistic expectations, along with the CEO. But it's not going to disappoint this long because it doesn't have to go up 100-fold to make me happy. 10-fold would make me happy. Okay. And 10-fold is, believe it or not that hard with a market cap of 247. So if it went up 10-fold, you'd have 2.47 billion, which is not a huge amount for promising biotech. That could happen the day of the announcement. It could go from, if the announcement were tomorrow, it could go from 710 to 71 in one day. I've seen it happen before. And if the results are truly spectacular, it'll happen here. If the results are so-so, you'll sell off. If the results are a bust, it'll go to zero. If the results are pretty good, but not sensational, it'll do very nicely. So, I'm using generalized terms, but that's basically a good summary. And you're getting very nice odds for this binary event. But the binary event really isn't that binary because it's primary. There's the primary goal, and then the secondary and tertiary goals of phase 3 study on head and neck cancer. So there's really gradations of what the results can bring. So it's really more than a binary play. There's all kinds of permutations and combinations. All right, so I think people are wrong to call it a binary play. Sometimes I'm guilty of doing it myself. In any event, it has pulled back. There's no question it pulled back on Monday. Why? Because there were what day was this? 10/24. So it pulled back 10/24. That was not Monday, Wednesday, Tuesday, Monday, Thursday. Getting a little mixed up with my days because I'm normally on Friday. So it pulled back. Today's Wednesday, Tuesday, Monday, Friday, Thursday of last week, based on an attack piece by a prominent blogger who is known to be a short, a hired short, so to speak, a hired hitman. And this hired hitman had a tremendous effect, which we talked about on Friday on Dr. J. Spike and Friends. And it came all the way back from $6 to close at 671 that day, and continued its upward trend through Thursday. You can see we had a little bit of a weak candle on Tuesday, and on Wednesday, we had a strong candle, even though it's a red one, because we were down as low as 688 and we closed at 710. That's a nice turnaround. So we have a small little red body with a big lower wick. We like that candle. Would have liked it better if it was green and made a new high from the day before, but that's the target now. So yet Tuesday's high at 747 is now a target. So we could draw that in. It's also perhaps resistance. You can think of it as a target if you're looking for a swing trade, or you could think of it as resistance. So in any event, this is what we have to take out, the near-term goal. And I think we can put the support right about here, the low of the day on this green candle. Should be support. Okay, so about 650. I don't think we get back to the 200 again. But if we do, that should act as support. But it seems to be acting as, on many occasions, as support. So the 200 in the worst case, which should be higher than 602, the next time it's tested. So down the road, will it pull back a little? It might. But I think more likely is for an ascent. The price should trade above the 100 and above the 50 prior to the readout. So I see the price going at least to $8.06 or $8 area. So from 7 to 8 looks like a nice swing trade to me. It's about $1 versus 50 cents on the downside. So you're getting 2-to-1 odds for a swing trade. Of course, most of my position is core, and I'm not trading this too much. I traded it once in the 7s, took advantage of a little dip to the low 6s and got back in. That's it. I haven't really been swing trading it, but if I were to swing trade it, right now I would look to get in at around $7, look for around 8, and be happy with that point, and not wanting to lose more than 50 cents as a stop loss. So that would be my swing trade on sell side. I love it. I love the trade, whether it's short term, intermediate term, or long term. Of course, it's not a sure thing, the way some bulls put it. It's they make it sound like, oh, they're giving away money. Let me tell you, money is not given away so easily on the stock exchange. There's a lot of risk in biotech. Something could go wrong that we can't even anticipate. I don't expect it will, but it can. And the wild enthusiasm of Gert Kirsten, the CEO, is not a minus, it's a plus. His buying the other day to curtail the short attack, I give him a lot of credit for that. But CEOs are mostly optimistic in general. So this guy is a little more ebullient than the rest, but it's not unusual for CEOs to be optimistic. So Clarence, you did set a buy stop for CVM, huh? Okay. All right, so is there any other I wanted to do? I guess so, but I'm Amazon. Let's just wrap it up with Amazon. And that we'll call it a day because I don't want to go on for more than 30 minutes. I believe I'm right around that 30-minute mark. So we'll just look at Amazon. Netflix, I don't like the business model. I don't like the competition. I think based on fundamentals, without even looking at the chart, it's a short. And I've been saying that for a long time. When it was up around $400, you can look back at some of my old videos, my old vlogs. Dr. J has been bearish Netflix all along. I continue to be bearish Netflix. Amazon, Dr. J has been bullish Amazon. And I continue to be bullish Amazon, despite any despite any breakup rumors, go ahead, break us up. Will be worth the parts will be worth more than the sum of the parts. No, the sum of the parts will be worth more than the whole. Whatever. You get the idea. All right, so let's take a quick look at Amazon. See if it loads quickly. Maybe I'll get rid of this one and this one. So all we have to load is Amazon. That helped a little, I think. Okay, so what have we got for Amazon? We have an interesting candle from Friday, a very big turnaround candle. It had been down big on the day, and we turned it around tremendously, and it's been up since. I love this chart. I think we're heading up, but the good news is we now have support right around here somewhere. So let me draw that in. All right, horizontal line. Alrighty, right around there. So right around this low and that low and a little bit more than the midpoint of this big green candle looks like a great place for support. It's also this low, excellent place for support at about 1740. So we have a cushion underneath, and we have what looks like a rally going. We did have a crossover of the 50, but it's not that far away from the 200. I think we crossed back with a sustained rally. We will cross back quickly, and then we have to worry about the 50 crossing back over the 100. This might be resistance up around 1836. So I don't really see the 200 as being a big hurdle. I see the 100 as being a big hurdle, or at least a hurdle, 1836. Some analysts took down the price of Amazon to about, I don't know, various numbers, 2,000, 2,250. I have various numbers. But Dr. J says no to them because Amazon is going to have a blowout quarter. They lowered guidance, but you wait and see. They're going to blow it out, and the stock will soar like it did last year. So I think it's going to soar earlier, though. I think it will soar pre-Christmas and post-Christmas. I think we're going to have an early Christmas for Amazon shareholders. All right, I'm not going to bother charting Netflix. We're going to stop sharing screen, and we're going to say goodnight. We're going to say arrivederci, au revoir, shalom, sayonara, Wiedersehen. Ciao. Don't forget to subscribe. Say hi to everybody. Bye-bye. See you on Friday. Don't forget, Friday at 7:30, Dr. J. Spike and Friends.